Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about one of my worst performing stocks, which is Qualcomm. So we're going to talk a lot about Qualcomm today. But the reason I wanted to talk about it is because this is the position I'm probably looking to increase this Friday. But why? For some people, it may not make sense, but for some others, it might make sense based off of numbers, cash flow statements, financial statements, and balance sheets, free cash flow, all those metrics that everyone seems to talk about, and how I base my assumptions on continuing to want to enter in this position. Now, it might seem different for other people where they look at a company like Qualcomm, and we'll talk about what Qualcomm is and so on and so forth, but use this video as a tool to determine when you're analyzing a company, when you're looking at getting into a position and not willy-nilly just throwing your capital into a company because you think the metrics look good. Sometimes the metrics can also be misleading based off of what's going on in the world, the economy, and just the business model in general. And so we're going to talk about it. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see today, the portfolio closed out at $13,690.02. We're down $91.44, down 0.66%. And that is a common theme throughout this past maybe week and a half now. So on the day, there it is. On the week, we're down $276.33, down 1.98% for the 1 month, down $663.88. down 4.62%. For the 3 months, we're up $380.30, up 2.86%. For the 1 year, though, we're down $35.81, down 0.26%. And for the all, we're up $943.39, up 7.4% since starting this portfolio. We're just going to go down and look at the cash position here. We got $68.23 and $100 hopefully coming in, eventually clearing, and hopefully that'll be enough to just buy one Qualcomm share this Friday, because that's probably what I'm going to do. Look at VFV, Vanguard S&P 500 Index ETF, one of the popular ones here in Canada from Vanguard for the S&P 500, down 22 cents on the day, down 0.24%. We got 9.7199 shares. Average price of getting in for us is $95.15, and it holds about 6.59% of the portfolio. Today's return, we're down $2.14, down 0.24%, and our total return since starting this position in this portfolio is down $33.58, down 3.63%. So I just want to talk about that one a little bit, not talk to you, but show you where VFV is standing, because it's one of the indices that are talked about the most. You got the Dow Jones, the S&P 500, and the NASDAQ, which is heavily on the tech side, which are talked about. Mostly what you hear about are those three indices, and they're all down. Okay, so by no surprise. So Qualcomm, let's talk about Qualcomm. Ticker symbol for Qualcomm is QCOM, I believe, for this one. I think. Is it QCOM? Yeah, QCOM. And full disclosure, this is not financial advice. This is just what I'm doing. And I do own the stock. As you can see, I own 7 shares of Qualcomm. Average price of ours getting in is $139.16, and it owns about 8.8% of the portfolio. Today's return, we're down $13.16, down 1.48%. And our total return since starting this position, we're down $100.76, down 10.34%. So it is one of my worst performing stocks. Cisco is the other one, which I can show you guys here just for purpose sake. $42.58 is what it's closing at USD, down 72 cents, down 1.66%. We own 23 shares. Average price of getting in is $52.09. Holds about 9.86% of the portfolio. Today's return was down $16.56, down 1.66%. And our total return since owning this position is down $218.68, down 18.25%. So both in the tech sector, of course, Qualcomm would be in that tech sector. But let's look at some of the metrics here. Price to earnings ratio is about 11.22, which is fine. We're always wanting to be in that range. For me, I want to be below 20. Here it is. It's there. 52-week high at $193.58. 52-week low at $118.23. And a yield right now at 2.26%. And as you can see, it's on the NASDAQ exchange. We just talked about that. It's one of the indices heavily in the tech side of things. So if you don't know, Qualcomm is a company that has two different sectors in their company. They have a licensing portion to their business that makes the majority of their business. That's when they sell their chipsets. So they are a chip manufacturer, but they sell their chipsets to a lot of things that need it. It's not a business to consumer business. It's a business to business, if that makes sense. B2B. So they do business with other businesses. So they have license to their chipset, which is, it's well known that they own Snapdragon. Snapdragon, you'll find, is probably the number one chipset found in Android phones, not in Apple phones anymore. It was never, so Apple's kind of moved away from Qualcomm, but still a majority of the market still uses the Snapdragon chipset. So what am I talking about? I'm not just talking about phones. I'm talking automobiles. I'm talking about computers. I'm talking about radio frequencies and so on and so forth. When you purchase the Qualcomm chipset, you have to pay a licensing fee to use that. They were a key player in 3G and 5G, and maybe some others. But if you don't know, Qualcomm is well known for suing their clients for not paying the licensing agreement that has come up, and that can sometimes be a concern for Qualcomm. Now, it's not a big concern to me because obviously that's the business. It's a beautiful business model. They made $10 billion in revenue, I believe, last year. And that's free cash flow. Free cash flow is a powerful thing. That is your gross minus capital expenditures to run your company and whatever's left over to pay out the 2% dividend yield, 2.26% dividend yield that is out there. Now, that is a large yield for a company at the size of $142 billion. Now, is Qualcomm, the thing is, last quarter, they reported great earnings, huge growth, huge revenues, and huge profit margins. I think their profit margins right now are in the high teens. And that's great to see. But we have to remember, this is where assumptions come in. This is where sometimes it can be confusing. If somebody who's been in the game of analyzing companies has analyzed Qualcomm, they'll notice that these numbers are quite the numbers. They are huge compared to what they did in 2020, what they did in 2021. But in 2022, to produce the numbers that they did in the last quarter, which was about a month ago when they reported, it makes sense that their prices went up and revenues go up, because as prices go up for them, revenues go up. They grow at the same metric. And the reason that's happening is because I think people have forgotten that there's still a chip shortage. And when there's high demand and low stock, basic economics, prices of things go up. And so it's very confusing for a company like this that reported great earnings, but is performing at the way it's performing. This company potentially still has a lot of growth to it, but is it sustainable for them to maintain a year over year, quarter over quarter growth with the way that the market is based on chips, shortages, prices of inflation, prices going up in chips because of the high demand and the low inventory, this chip shortage? It's very well known. We all know this. And so when you look at their numbers, they look great. And this is what I'm talking about when you're analyzing a company. If you're doing that, it can be misleading in a lot of ways. You see great numbers, but you have to take what is going on in the market and take that into factor as well. Okay. Some of the companies that I think that come to mind when people talk about them is like Enbridge for me. I'm not a fan of Enbridge, even though the numbers look great and they pay a high dividend. And at the time, oil and gas production was super high, I still didn't buy Enbridge. I still did not look at Enbridge. I know a lot of people, it's a very popular company around dividend investors, but I'm just not a fan. And I'm probably just not a fan because I'm not a fan of, traditional energy sector companies. But this is where some people like Qualcomm. This is where some people don't like Qualcomm. For me, I still like Qualcomm. I still like where it's going. Of course, I'm at a losing position. As you can see, I'm down 10.34% on the position. My average price is $139 and it's down to $124. Now, is that a bad move? Maybe. Am I mad about it? No. Am I kind of happy that it's down? Sure. I might buy some more. I probably will buy some more because I do believe in where the market is going when it comes to chipsets. We know where the market is going. We are trying to get away from overseas purchasing of them being the biggest manufacturers of chipsets and trying to bring that back onto North American soil, which is great. We're seeing that trend, and Qualcomm will probably be a big player into that. Now, when I'm talking about metrics, the metrics are great, absolutely. But I know that it's probably not sustainable. At a 30% year-over-year growth, that's just massive for a company that's worth 142, let's call it $143 billion. That's like, to get 10x, they're gonna have to get to $1 trillion. We're getting in the range of Apple, of Amazon, of Tesla, in that range of market cap. And I just don't think where Qualcomm is, because it's a very established company already, and they're doing a lot of things to diversify. But I even believe that the management company of Qualcomm didn't see the numbers that they saw in the last quarter. And it's not performing the best when it comes to stock price. This is why stock price is not the number one factor you should look at. PE is not the number one factor you should look at. Yield is not the number one factor you should look at. They have to be bundled together to make an educated, due diligence, strategized position to want to make a purchase in the company or invest in that company. For me, I believe in the company. Some others don't. Some others will not. But I truly believe Qualcomm will do what it needs to do. And these prices at $124, if it was at $100, I'd be so happy, and I'd be going in there heavy revy on the $100 per share, because I do see where it could be. I see the worth in this company. I see what they're doing. They just got to change a little bit of their business ethics when it comes to suing their clients to get their money. So that's my little rant about Qualcomm. Is it a buy? Is it a sell? Is it a hold? Wall Street seems to think that it's confusing Wall Street for the most part, but I don't really take Wall Street seriously. I think Qualcomm, for me, is a position I'll continue to hold, continue to dollar cost average in, and try to get it to that price target about $100 for me, knowing where the world is going. And so on that, guys, hopefully you did enjoy. Let me know if you own Qualcomm or not, totally up to you. And let me know your thoughts on what I just talked about today. So hopefully you guys have a great week. Don't forget to leave a like and subscribe. I haven't done one of these in a while where I talk about one specific company. And so again, leave a comment down in the section below to let me know if you want to see more of this stuff. So have a great week, and we'll see you in the next one. Bye.